Hey, Puppy Trades! I want to do a video analysis update on Nvidia and really just recent price action from Nvidia. We got a little news headline today. I love it when there's news headlines because, then retail has to make this decision. Do we really believe Elliott Wave is real? Do we really believe technical analysis is real? Or, the guy on the podium said, hey, the experts are saying this ain't going to work out. Anyway, Nvidia stock drops on expansion of chip export restrictions to China. Nvidia disclosed that the U.S. government has expanded its restrictions on the export of certain chips and systems for data centers to China and certain other countries. The expanded restrictions are focused on keeping U.S. advanced AI technologies, right? Oh my gosh. Advanced AI technologies out of the hands of those that could potentially use the tech for nefarious purposes. Well, that's good to see that we're being all careful about AI right now. I'm sure the U.S. government will be really responsible with it. The expanded... And China won't be, right? We can trust America, but not China. The expanded restrictions are effective in 30 days. They will not affect Nvidia's current fiscal quarter. Well, the market's forward looking, and you can read all this, right? It fell nearly 5% on Tuesday. They give their opinions. Long-term investors need not be concerned. We'll see how true that is. Expansion of restrictions. This has happened before, and Nvidia fell 8% the last time that there was a ban or something. And then, this is all a bunch of, the technical stuff, what happened, the rules. All right. Nobody's here for that. Because in the technical analysis community, and luckily now, with the great people at YieldMax, the quant community, this is a post I had from July 24th talking about the possibility that Nvidia goes sideways for a pretty long time, but because implied volatility was still pretty high after this move, I was going to be holding Nvidia. Nvidia's implied volatility is usually pretty high anyway, even when it's relatively low. And so these could be, nice months to collect some premium through NVDY, which I have. And I'm going to keep holding and collecting premium from NVDY. We'll talk about why in this video. Looking at NVIDIA from the Elliott Wave, from the long term, I get plenty of them wrong. This one, has had 2 or 3 or 4 pretty big hits. Looks a little messy up there. Both, or all of them, this one and this one and this one was using these option screeners, the long straddle and the long strangle screener. I say that because Tesla's going to report earnings after the market. Tesla's been all over the strangle screener. Anyway, this is an NVIDIA video. NVIDIA, in the long term, should long-term investors be concerned? Well, this isn't investment advice, but from an Elliott Wave perspective, this is a large wave 1. This is an ABC wave 2 between the 61.8 to 78.6% retracement. And well before anyone was talking about AI, I said, what's going to happen when Nvidia blows past all-time highs? Well, we're going to say it was all because of artificial intelligence ended up being the answer. But Nvidia right now is at the length of wave 1, placed at the wave too low. So I don't think the big message is the same as, these guys, like long-term investors, don't even worry about it, But I do think that this is a short-term bear trap. So why would, long-term investors maybe think about having taken a little of the profits if that's what their certified financial advisor told them to do? Well, if I am fortunate enough to catch a really big winner and I'm up 200%, 150%, even 100%, even if it was a low beta stock and I took a large position, I could do this up 50 or 60%. I'll sell some of the portion of the current holdings that's in profit. So if I'm up 150%, I could sell half the position have more than the original risk of the trade removed, and even realize profit, and also have more than the original positions of exposure still, right? So it wouldn't really make sense to just, be willy-nilly up here holding a 200, 50, 300% gain, maybe, unless, it's to keep collecting some premium. That's just me, thinking out loud. Anyway, why I think this is a possible bear trap in the short term is because in the long term, the subdivision of this big wave 3, which may be hard to see, is that I think this is wave 1 and wave 2. This big rally up here was wave 3, and this big wick is wave 4. So Nvidia still could be within wave 5 of this large wave 3. And that's why I really liked NVDY, because this is kind of the classic, once wave 3 of wave 3 has been entered, and it's confirmed to be entered when the wave 1 high is broken, it enters a series of what's called 4-5 and 4-5. So it entered wave 3 of wave 3. Now it has to end wave 4 of wave 3, which I believe it has, and finish wave 5 of wave 3. We'll talk about, did wave 5 of wave 3 finish. That's the bear argument, by the way. That's the bear argument. So it's going to look something like this, that this big wave 3 ended right here. This big wave 4 ended right here. And this little itty bitty rally right here was wave 5. So now, what would be the rest of the bear argument then? Well, what would be the rest of the bear argument if this is wave 5, which I'm not going to label for the sake of just showing what I actually think is happening, is that this is wave A, this is wave B. So the bear argument is actually pretty simple. They're saying we're not going to go above 475.88, and we're going to go at least the length of wave A, placed at the wave B high, and that's going to be wave C. So that would also be an interesting place, if that did happen, to say, the higher 380s, the lower 380s, is where wave A, wave B, the wave C equal legs target would be met anyway. It's not too far away. Anyway, that would be one bear argument. Another bear argument is that this would be wave 1, wave 2. This isn't wave A, wave B, wave C. It's wave 1, wave 2. We enter wave 3 of wave 3. I don't think either of those things are going to happen, but after big rallies like this, I definitely am not one of those, get cocky and, keep 250% gains unrealized. Anyway, unless a lot of premium is coming in to, realize it indirectly. What I do think is happening in a very short-term count is that this whole thing wasn't a large degree wave 5. I actually think this is wave 1 of wave 5. That would make this wave 2 of wave 5. That's my bias at this time. And that's actually very easy to invalidate, that wave 2 is ended at 409.80. So that's a little tight. The real invalidation that really matters is 403.11. So that's kind of the thing with shorter term counts. They get invalidated quicker, but they also hit quicker. So we're going to figure out if this is correct or not pretty soon. I'm going to hold NVDY and keep collecting these dividends regardless, because I think in the big picture, which I really didn't want to focus on too much, these corrections, they aren't going to be fun. Some of them are going to be long, but eventually they get bought up and we see, NVIDIA trudge into the 500s at some point in the future with the, grace of yield max, waiting for that has become more profitable than ever. Anyway, what do I think is going to happen? I think what's going to happen is that this is a bear trap. And that's kind of what I started this video with, is that we have these interesting terms in FinTwit, that if we said them a different way would sound very crazy, right? We call this a bear trap, or the bulls are going to call this a bear trap, right? But what's another way of saying a bear trap? Especially one that involves China and the American government and a large cap company like Nvidia. That's a pretty coordinated, calling this a bear trap, it seems innocent, but what's the real implication there? that China and America and Nvidia have all conspired together to put this wave 2 in, right? And most people can't fathom that, because we're told we're enemies with China, right? We're enemies with Russia. We're enemies, we're enemies with all these countries that we also have international agreements with, regarding Antarctica. Anyway, and we also do so much business with China that it's calling them our enemies, Fun fact, for about the past decade, it's actually been easier for a broke person to become a very wealthy member of the middle class if they were born in China versus America. So I'm not pro, China, communism. They've got a Uyghur Muslims in concentration camps, but, we put Japanese people in concentration camps. Anyway, NVIDIA, wave 1, wave 2. I think this is another wave 1 and another wave 2. So the invalidation, the first invalidation is 409.80. The bigger invalidation for this short-term setup is 403.11. Okay, I could look silly here, but I think this is wave 1 and wave 2. So that means this is another wave 1 and another wave 2. So the big implication on both degrees is pretty much the same. 403 to 409 holds. The length of wave 1 placed at the wave 2 low gets hit. It takes NVIDIA up to 500 for a wave 3 target. And that's really kind of what both of the counts would suggest. So it's a pretty interesting RR. 409.80 and 403, 0.11 is the invalidation. And then a possibility that NVIDIA enters wave 3 of wave 3. The length of wave 1 placed at the wave 2 low would also kind of line up with this. The minimum wave 3 target would be 486. For a wave 3 like this, we'd probably see it go a little past that. Even if there was a shallow wave 4 and a wave 5 higher, it would still set up the similar message that, 403, 409 holds, and NVIDIA ends up in the low, 500s, for this next phase. And, it can be counted from there. Wanted to give a little outside evidence. I mean, NVIDIA has been such a leader. Sometimes after a stock, and there's, multiple sides to that. Just one final picture. I wanted to get this little too. So this is the full count. Maybe I need to do 6 months. 3 months was prettier. Anyway, wave 1, wave 2, 409.80 to 403.11. And this is another wave 1 and another wave 2. We can see a wave 3 of wave 3 be entered. Could look something like this, taking NVIDIA up to the lower 400s. So NVIDIA has been a huge leader. The classical TAs will say, don't bet against the leader, and I think there's some truth to that. But I also think that NVIDIA has been a huge leading indicator for the rest of a sector that is reasonably pretty correlated with NVIDIA. So in the long term, this is SOXX, and this might give better downside levels. It might be chasing NVIDIA to the 500s. Some might call that chasing. This would be more of the sector-wide route. I think this is a wave 1 and a wave 2. This is a large wave 3 and a wave 4. It's at the 61.8% retracement. One thing I always like to bring up with this count is that one of the, if we do end up seeing SOXX make all-time highs, one of the big pieces of evidence was that this was the highest reading on the monthly RSI. So per Elliott wave, wave 5 ends with momentum divergence. This was the highest reading in price and on the RSI. Therefore, a wave 5 had not occurred. We've seen a lot of, we'll see if, that ends up being true. Not too much further to go. Anyway, what I think is happening with SOXX, just to give a little more levels, I think this is an ABC correction that's ended. And this is a wave 1 and a wave 2. And this is another wave 1 and another wave 2. Part of the evidence for that is that this big wave 3, I believe not only is it's the largest wave, it makes the highest reading on the weekly RSI. So I think this is 1, 2, 1, 2. This is wave 3 of wave 3, and we're ending wave 4 of wave 3. So I like this wave one high is the invalidation / stop for now. It's really just more of the stop. 445.34. Above 445.34, I think this is wave one, wave two, wave three, and ABC correction ending wave four. The length of wave one placed at the wave four low gives a wave five target of about 565. Might as well just measure out these fibs, not be lazy. But yeah, it's basically the same thing. This might give a slightly better, slightly wider invalidation, 536.88. That's 78.6% retracement, whatever that ends up being. And then, I'll call it a morning. 394.59. Let's see. So a little wider invalidation than that wave one high of 445.34 is 425.04. We can see SOXX in wave four make a new high. In wave five up towards 565. We can see Nvidia hold wave three of wave three. I want to talk about a little bit of the results so far. Past performance does not indicate future results, but Nvidia had the total return so far, just holding and reinvesting dividends outright since inception. I'll make sure this is updated towards today. I'm not sure. This won't conclude today's drop. Okay, so this stops. This is from 5:15 to 10:13. It does not include today's drop, but the growth of $10,000 has turned into $13,344. Interesting for a yield max ETF. That's not blending it with Nvidia. That's just the yield max ETF outright. So what we've seen a little bit of a pattern that we've possibly seen from Nvidia and Tesla and Clip and Coney for Coinbase, is that if the IV low for the past 52 weeks is, in the high 30s, that could return, 35, 40%, over the year possibly. And so that's what we've been seeing. And in that situation, if the stock's in a bull or even if it's just sideways, it looks like, I'm investigating with Clip and Nvidia, some of these buy right ETFs can just appear to be held outright. Clip, another one. I mean, this is kind of crazy for Clip. This is what I wanted to show. I think this is just wild. Maybe I'm a loon. KWeb since Clip's inception is down like 27%, right? So you would think that the Clip covered call ETF would get wrecked. No. Buying and holding Clip and reinvesting dividends, even though KWeb is down 24, 25% in this time, is actually returning at an annual rate 7.69% of the 7.69%. So even though KWeb's been in a big bear, Clip buying and holding and reinvesting has actually been profitable. Nvidia's been in a bull, so that metric isn't as impressive, but just something I wanted to share.